Based on the provided data for Bitcoin, a bullish investment strategy appears promising. Price history shows a general upward trend, with recent fluctuations around the $67.00 to $69.00 range. The forecast predicts continued growth, reaching $72.900 within the next week. This suggests a potential for significant returns in the short to medium term. Based on the provided Ethereum price history and forecast, a cautious short-term investment strategy appears most suitable. The historical prices demonstrate a fluctuating trend with a slight downward bias in recent weeks. Forecast indicates continued price consolidation around the $2,500 $2,600 range. This suggests a period of sideways movement with limited upward or downward momentum. Considering this outlook, a short position with a tight stop loss could be considered. An entry price around $2,580 would allow for potential profit if the price dips towards the forecast lows. The stop loss should be placed at $2,620 to limit potential losses if the price unexpectedly rises. Target price could be set at $2,520. Aiming to capture a reasonable profit within the predicted consolidation range. This strategy prioritizes risk management and capital preservation, while seeking modest gains from short-term price fluctuations. Given the price trends and forecast for Ripple, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend over the past 2 weeks, and the forecast indicates further declines in the coming week, while the support price sits at $0.4996, providing a potential floor. The resistance at $0.5245 suggests limited upward movement. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An aggressive short-term investment strategy could involve entering a short position at $0.52, with a stop loss at $0.532 to protect against unexpected price surges. The target price should be set at $0.5, aiming to profit from the predicted price drop towards the support level. This strategy acknowledges the current bearish sentiment and seeks to capitalize on potential short-term price movements. Given the Solana price trends and forecast, a medium-term investment strategy focusing on a long position appears promising. The historical price data demonstrates a consistent upward trajectory, with the current price hovering near the support level of $171.85. The forecast suggests further price increases, with the highest projected price reaching $186. This upward momentum, coupled with the support level, indicates a favorable environment for a long position. Therefore, an investment strategy for Solana would involve entering a long position at the current market price, around $176. A stop-loss order should be placed at $171.85, the support level, to limit potential losses. Target price should be set at $184. The resistance level, aiming to capitalize on the projected price increase. This strategy allows for potential profit while managing risk through a well-defined stop-loss. Given the price trends and forecast for Cardano, a conservative investment strategy would focus on a medium-term approach. The historical prices show a slight upward trend, but the recent price decline indicates potential consolidation or a short-term correction. The forecast suggests a continued downward movement in the coming week, with prices potentially dipping below the support level of $0.3223. However, the historical data also suggests a strong bounce from this support level in the past. Therefore, a long position is recommended for a medium-term investment strategy. The entry price should be around $0.325, slightly above the support level to minimize risk. The stop loss should be set at $0.318, below the recent swing low, to protect against further downside movement. The target price should be set at $0.355. Aiming to capture a potential price rebound towards the recent resistance level. This strategy allows for a balanced approach, capitalizing on the potential for an upward move, while mitigating the risk of a prolonged decline. Based on the provided price information for SU coin, a cautious short-term investment strategy is recommended. The historical price data shows a volatile trend, with recent fluctuations suggesting a potential for further short-term price adjustments. Forecast price indicates a downward trajectory over the next week, suggesting a bearish outlook, while the support price provides a potential floor for the asset. The resistance level is relatively distant, indicating limited upside potential in the near term. Therefore, a short position is advisable, aiming to capitalize on the anticipated price decline. An entry price of $1.95 would allow for entry at a slightly higher level than the predicted lowest price, minimizing potential risk. The stop loss should be set at $2.02 to protect against any unexpected upward price movements. The target price should be set at $1.75, aligning with the support price and allowing for potential profit taking before the asset potentially finds a floor. This strategy prioritizes risk management and capitalizes on the short-term bearish outlook for SU coin. Given the price trends and forecast for Filecoin, cautious investment strategy would focus on a medium-term approach. The historical prices show a slight downward trend, with the current price hovering near the support level of $3.498. The forecast suggests Filecoin might continue to decline in the short term, reaching around $3.56. However, the historical price data also indicates that Filecoin has bounced back from similar support levels in the past. Therefore, a medium-term investment strategy with a long position is recommended. An entry price around $3.50 would allow you to buy in at a potentially discounted price. The stop loss should be set at $3.45 to protect against further downside movement. Target price could be set at $3.80, aligning with the historical resistance level and the potential for a price rebound. This strategy aims to capitalize on a potential price recovery in the medium term, while mitigating risk with a well-defined stop loss. Based on the provided Theta network price history and forecast, a short-term bearish strategy appears most suitable. The 2-week price change demonstrates a downward trend, with the forecast indicating further declines. The historical price data shows a consistent downward trajectory, further supporting this bearish outlook. Therefore, an investment strategy would involve taking a short position on Theta network. A suitable entry price would be $1.28, aligning with the recent price action and the forecast. The stop loss should be set at $1.32, slightly above the entry price, to limit potential losses if the price unexpectedly rises. The target price would be $1.14, the lowest point projected in the forecast, allowing for a potential profit before the market potentially reaches its support level. Given the current price trends and the provided forecast for Dogwifhat, a cautious investment strategy focusing on the short term would be advisable. The 2-week price history shows a fluctuating pattern with a slight downward trend, while the forecast indicates a continuation of this downward movement. Although the support price at $1.642 offers a potential floor, the resistance price at $2.566 suggests limited upward potential in the near future. Therefore, a short position on Dogwifhat is recommended. An entry price of $2.50 would allow you to capitalize on the anticipated price decline. Setting a stop loss at $2.57 would protect your investment from unexpected upward movements. The target price should be set at $2.40, aiming to secure profits before the price potentially reaches the support level. This strategy prioritizes risk management while aiming to capitalize on the short-term bearish outlook for Dogwifhat. Given the current price trends and the provided forecast for Stellar, a cautious investment strategy leaning towards the short term appears most suitable. The historical price data shows a slight downward trend over the past 2 weeks, with the forecast suggesting further consolidation around the current price level. While there's potential for a small upward movement, the resistance level at $0.095 presents a significant barrier. Therefore, short-term strategy focusing on potential price dips within this range is recommended. An entry price around $0.0945, near the predicted average price for the coming week, would be prudent. A stop loss should be set at $0.095 to limit potential losses if the price unexpectedly rises above this level. The target price could be set at $0.093, aiming to capture a small profit from a potential price decline towards the support level. This strategy allows for participation in the market without significant risk exposure, capitalizing on short-term price fluctuations within a defined range. Given the price trends and forecast for Starknet, a cautious investment strategy would focus on a short-term approach to manage risk. The historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines. The support price is at $0.3748, while the resistance is at $0.4029. This suggests that the market sentiment is currently bearish, and there is a higher probability of the price falling towards the support level. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $0.395 could be considered, aligning with the current price and the forecast. The stop loss should be set at $0.4029, the resistance level, to protect against any unexpected price recovery. The target price should be set at $0.357, slightly above the historical low, allowing you to take profits before the market hits major support. Based on the provided price information for PENDLE, a medium-term investment strategy appears most suitable. The historical price data reveals a volatile pattern with both upward and downward swings. The current price is relatively close to the support level of $4.347, suggesting a potential for a bounce back. Furthermore, forecast price indicates a slight upward trend over the next week, converging around $4.67. This suggests that the asset might experience a period of consolidation before potentially moving higher. Therefore, a long position is recommended for a medium-term investment horizon. The entry price should be around $4.40, slightly above the support level, allowing for a margin of safety. The stop loss should be set at $4.30 to limit potential losses if the price drops below the support level. Target price can be set at $4.80, aiming to capitalize on the potential upward movement indicated by the forecast price. This strategy balances risk and reward, allowing for potential profit while mitigating the downside risk associated with the asset's volatility. Given the price trends and forecast for render, cautious investment strategy would focus on a short-term approach to manage risk. The historical prices show a downward trend, with the current price near its forecast and below the support level of $4.563. The resistance is at $5.231, indicating that upward movement may be limited. In this scenario, a short position is advisable to capitalize on the potential for a price decrease towards the support level. An aggressive entry price would be $4.92, aligning with the historical price and the forecast. The stop loss should be set at $5.05 to protect against any unexpected price recovery. The target price should be set at $4.6, slightly above the support level, allowing you to take profits before the market potentially bounces back. This strategy prioritizes risk management and aims to capitalize on the anticipated price decline in the short term. Given the price trends and forecast for VeChain, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines. Although the support price is at $0.02134, the resistance is at $0.02194, suggesting limited upward potential in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $0.0225 aligns with the current price and the forecasted decline. The stop loss should be set at $0.0235 to protect against any unexpected price recovery. The target price should be set at $0.0215, allowing you to take profits before the market hits major support at $0.02134. This strategy aims to minimize risk while taking advantage of the potential for short-term price movements in VeChain. Based on the provided Binance Coin price history and forecast, a short-term investment strategy appears most suitable. Price has shown recent volatility, with a slight downward trend in the past 2 weeks. The forecast suggests a continuation of this trend, with prices potentially reaching $596 in the coming week. Therefore, a short position is recommended, capitalizing on the anticipated price decline. An entry price of $598, slightly above the current price, allows for a small margin of safety. The stop loss should be set at $601, above the entry price, to limit potential losses. Target price can be set at $585, aligning with the lower end of the forecast range, aiming to capture a significant portion of the expected price movement. Given the price trends and forecast for Conflux, a short-term investment strategy appears most suitable. The historical prices demonstrate a clear downward trend, with the forecast indicating further declines. The current price is near the resistance level of $0.1448, suggesting a potential for a pullback. This bearish outlook makes a short position the most logical choice to capitalize on the anticipated price decrease. Therefore, an aggressive short-term investment strategy would involve entering a short position at $0.144, current resistance level. The stop loss should be set at $0.147, slightly above the current price, to limit potential losses if the price unexpectedly rises. The target price should be set at $0.134, aligning with the support price and representing a reasonable profit target. This strategy aims to profit from the anticipated price decline, while minimizing risk through a well-defined stop loss. Based on the provided information for Worldcoin, a cautious investment strategy is recommended. The 2-week price change reveals a fluctuating trend, with the recent price hovering around $2.06, while the forecast suggests a slight decline over the next week. The support price at $1.698 indicates a potential floor for the price. Considering the volatility and the lack of a clear upward momentum, a short-term investment approach is advisable. A long position is not recommended at this time due to the bearish forecast. A short position could be considered with an entry price near $2.15, aligning with the forecast. The stop loss should be set at $2.31 to limit potential losses if the price unexpectedly surges. The target price could be set at $1.8, allowing for a reasonable profit margin while staying below the support level. This strategy aims to capitalize on the potential price decline within a short time frame, while managing risk through a well-defined stop loss. Based on the provided data for Avalanche, a cautious investment strategy appears most suitable. The 2-week price history reveals a fluctuating trend with a slight downward bias. The forecast suggests continued downward movement in the coming week, reaching a low point around $25. This indicates a bearish outlook in the short term. Considering this, a short position in Avalanche is recommended. An entry price of $26 would allow you to capitalize on the potential price decline. To manage risk, a stop loss should be set at $26.84, slightly above the current price, to limit potential losses if the market unexpectedly reverses. A target price of $25.62, slightly above the support level, offers a realistic profit target while allowing for some room for price fluctuations. This strategy prioritizes risk management and aims to profit from the anticipated downward price movement in Avalanche. Given the price trends and forecast for Jupiter, a moderately aggressive investment strategy would focus on a short-term approach to take advantage of the projected upward momentum. The historical prices show a general upward trajectory, with the current price close to its forecast and near the support level. The resistance is at $1.0599, indicating that there is still some room for upward movement. In this scenario, a long position is advisable to capitalize on the potential for a price increase towards the resistance level. An ideal entry price for this strategy would be around $1.02, aligning with the forecast and allowing for some room to enter the trade. The stop loss should be set at $0.9949, the support level, to protect against any unexpected price reversals. The target price should be set at $1.0599, the resistance level, allowing you to take profits before the market potentially encounters significant resistance. This strategy balances risk and reward, aiming to capitalize on the projected price increase while minimizing potential losses. Given the historical price data and the forecast for EOS, a cautious investment strategy is recommended. The 2-week price change shows a downward trend, with the forecast indicating further declines. The support price is at $0.4381, while the resistance is at $0.4565. This suggests a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. For an aggressive short-term investment strategy, an entry price of $0.450 could be considered. This entry point allows you to buy in near the resistance level. Anticipating a potential price drop, the stop loss should be set at $0.460 to protect against any unexpected price recovery. The target price should be set at $0.430, slightly above the support level, allowing you to take profits before the market hits major support. Based on the provided data for TRON, a short-term investment strategy appears most suitable. The historical price data shows a recent consolidation phase, with the price oscillating around the $0.16 mark. The forecast indicates a slight upward trend, suggesting a potential continuation of this consolidation. However, the resistance level at $0.1653 presents a potential ceiling for the short-term price movement. Given these factors, a long position with a conservative approach is recommended. An entry price around $0.1627, close to the support level, allows for a potential upside while minimizing risk. A stop loss order could be placed at $0.159 to protect against unexpected price drops. The target price could be set at $0.165, aiming to capture a portion of the potential upward movement before encountering resistance. This strategy capitalizes on the anticipated consolidation while limiting potential losses. Based on the provided C price history and forecast, a short-term bearish strategy appears most suitable. Price history reveals a downward trend, and the forecast anticipates further declines over the next week. The price currently hovers near its support level of $0.367, suggesting a potential for further downward movement. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current price of approximately $0.422. A stop-loss order should be placed at $0.436 to minimize potential losses if the price unexpectedly rebounds. The target price for this strategy would be $0.378, aligning with the forecast's lowest projected price. This approach aims to capitalize on the anticipated price decline, while mitigating risk through a well-defined stop-loss. Based on the provided Shiba Inu data, a short-term investment strategy appears most suitable. The historical price data shows a slight downward trend over the past 2 weeks, and the forecast indicates continued decline, while the support price at $0.00000164 presents a potential floor. The resistance at $0.000190 suggests limited upside potential in the near term. Given this outlook, a short position is recommended to capitalize on the anticipated price decrease. An ideal entry price for this strategy would be around $0.000179, aligning with the forecast's lowest point. A stop-loss order should be placed at $0.000182 to limit potential losses if the price unexpectedly rises. The target price could be set at $0.000165, aiming to capture a portion of the predicted decline before reaching the support level. This short-term approach allows for potential profit from the anticipated price drop while mitigating risk with a well-defined stop-loss order. Based on the provided price history and forecast for Dogecoin, a medium-term investment strategy appears most suitable. The historical price data shows a generally upward trend, with recent fluctuations suggesting consolidation. Forecast indicates continued upward momentum, with prices projected to reach $0.171 within the next week. This suggests a bullish outlook for Dogecoin in the short to medium term. Given this outlook, a long position is recommended. An ideal entry price would be around $0.144, aligning with the recent consolidation period and below the current price. A stop-loss order should be placed at $0.138 to limit potential losses if the price drops unexpectedly. The target price could be set at $0.166, aiming to capture a significant portion of the projected upward movement. This strategy allows for potential profit while managing risk effectively within a medium-term time frame. Given the price trends and forecast for Hooked Protocol, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend over the past 2 weeks, with the current price hovering near the support level of $0.3805. The forecast suggests Hooked Protocol could continue to decline, reaching as low as $0.389 in the coming week. Therefore, a short position is advisable to capitalize on the anticipated price decline. An aggressive short-term investment strategy could involve an entry price of $0.410, aligning with the current price in the forecast. The stop-loss should be set at $0.4341, the resistance level, to protect against any unexpected price recovery. The target price should be set at $0.380, slightly above the support level, allowing you to take profits before the market hits major support. Aevo shows a downward trend in its 2-week price change, and the 1-week forecast suggests further decline. Considering the forecast price ranging from $0.321 to $0.326 and the support price at $0.3168, a short-term bearish strategy appears to be the most suitable approach. An entry price at $0.341, close to the current price and the forecast high, would allow for a potential profit as the price moves towards the support level. A stop-loss order should be placed at $0.3454, just above the current resistance price, to minimize potential losses if the price unexpectedly rises. The target price could be set at $0.317, slightly above the support level, to capture a good portion of the anticipated price decline. This short-term strategy capitalizes on the anticipated downward movement of Aevo, aiming to profit from the price decline towards the support level. The stop-loss order provides a safety net against unexpected price surges, while the target price allows for a reasonable profit potential within a short time frame. Given the price trends and forecast for Coin, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the current price close to its forecast and near the support level of $0.006595. The resistance is at $0.007249, indicating that there is limited upside potential in the near term. In this scenario, a short position is advisable to capitalize on the potential for a price decrease towards the support level. For a short-term investment strategy, an entry price of $0.0071 would be ideal, slightly above the current price and close to the resistance level. The stop-loss should be set at $0.0073 to protect against any unexpected price recovery. The target price should be set at $0.0067, slightly above the support level, allowing you to take profits before the market hits major support at $0.006595. This strategy aims to profit from the anticipated decline in prices while minimizing potential losses. Based on the provided information for Coin, a cautious investment strategy focusing on the short term appears most suitable. The historical price data reveals a fluctuating trend, with recent dips suggesting a potential bearish momentum. The forecast price also indicates a downward trajectory over the next week, reaching as low as $0.0167. Given this outlook, a short position could be considered to capitalize on the anticipated price decline. To implement this strategy, an entry price around $0.0176, slightly above the current price and below the immediate resistance level, would be prudent. A stop-loss should be placed at $0.01807, slightly above the entry price, to limit potential losses if the price unexpectedly rises. The target price could be set at $0.0162, aligning with the support level and aiming to capture a reasonable profit from the predicted decline. Based on the provided P-price history and forecast, a short-term investment strategy appears most suitable. The historical data reveals a fluctuating price trend, with recent fluctuations suggesting volatility. The forecast predicts a continued decline in price over the next week, reaching as low as $0.00000922. This downward trajectory, coupled with the proximity to the support price of $0.00000913, indicates a potential for further price drops. Therefore, an aggressive short-term strategy would involve taking a short position on PEP. A suitable entry price would be around $0.00000954, aligning with the initial forecast price. The stop-loss should be set at $0.00000983 to limit potential losses in case of an unexpected price surge. The target price could be set at $0.00000913, aiming to capitalize on the potential price drop to the support level. This strategy leverages the anticipated downward momentum while minimizing risk through a well-defined stop-loss. Given the price trends and forecast for Coin, a cautious investment strategy would focus on a short-term approach. The historical prices show a recent downward trend, with the current price hovering near the support level of $4.753. The forecast suggests a continued decline, with prices potentially dropping to around $4.98 in the coming weeks. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An ideal entry price would be $5.00, aligning with the resistance level and the upper end of the forecast. The stop loss should be set at $5.10 to protect against any unexpected price recovery. The target price should be set at $4.70, slightly above the support level, allowing you to take profits before the market hits major support. This strategy prioritizes risk management and aims to capture a modest profit from the anticipated downward movement in TRON coin. Given the historical price fluctuations and the one-week forecast for Bitcoin Cash, an investment strategy focused on a short-term perspective appears most suitable. The recent price action has shown some volatility, with prices dipping below the support level of $329.1 before rebounding. The forecast suggests a potential consolidation around the $358 price range, indicating a period of sideways movement. Therefore, a neutral approach is recommended, waiting for a clearer price breakout before committing to a long or short position. A potential entry point could be around $355, allowing for a stop loss at $347 to manage risk. Target price could be set at $368, capitalizing on the potential upside towards the resistance level. This strategy allows for flexibility and profit potential, while mitigating risk in a volatile market environment. Given the price trends and forecast for Chainlink, a short-term investment strategy focusing on a long position appears most suitable. The historical prices show a slight upward trend, and while the forecast suggests a slight dip in the coming week, it remains relatively stable around the current price level. The support price at $10.53 provides a cushion against significant downside movement, while the resistance at $11.62 suggests potential for further upside. Therefore, an aggressive strategy would involve entering a long position at the current price of $11, with a stop loss set at $10.53 to minimize potential losses. The target price could be set at $11.62, aiming to capitalize on the potential for Chainlink to reach its resistance level. This strategy capitalizes on the short-term bullish momentum while managing risk through a well-defined stop loss. Based on the provided Polkadot price information, a short-term bearish investment strategy appears to be the most prudent approach. The 2-week price history demonstrates a downward trend, and the 1-week forecast predicts further price declines. Price is currently situated near the resistance level of $4.186, suggesting potential for a pullback. Therefore, a short position is recommended with an entry price at $4.15. A stop loss should be placed at $4.25 to limit potential losses if the price unexpectedly surges. The target price for this trade is $4.05, aiming to capitalize on the anticipated price decline towards the support level. This strategy capitalizes on the short-term bearish sentiment indicated by the price data and forecast. Given the price trends and forecast for Near protocol, a cautious investment strategy would focus on a short-term approach. The historical prices show a fluctuating trend with a slight downward bias, and the forecast indicates a continued decline. The support price sits at $4.12, suggesting a potential floor for the price, while the resistance is at $4.685, indicating a ceiling for potential upward movement. Considering the bearish outlook and the forecast, a short position appears more suitable. An aggressive short-term investment strategy would involve entering a short position at $4.35, slightly above the current price and the forecast's initial dip. This allows for a buffer against any unexpected price surges. The stop loss should be set at $4.44, aligning with the first forecast price, to protect against potential losses if the price unexpectedly rises. The target price should be set at $4.15, slightly above the support price, aiming to capture a portion of the anticipated decline while minimizing risk. This strategy aims to capitalize on the potential for a short-term price dip in Near protocol. Given the price trends and forecast for stacks, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines. The support price sits at $1.637, while the resistance is at $1.857, suggesting that the price is likely to remain within this range in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $1.80, slightly above the current price, would allow you to enter the trade as the price potentially retraces before continuing its downward movement. The stop loss should be set at $1.857. The resistance level, to protect against any unexpected price recovery. The target price should be set at $1.65, slightly below the support level, allowing you to take profits before the market hits major support. Given the price trends and forecast for Aptos, cautious investment strategy would focus on a medium-term approach to capitalize on potential price fluctuations. The historical prices show a slight downward trend over the past 2 weeks, with the forecast indicating further declines in the short term. However, the support price at $5.75 provides a potential floor for the price, suggesting a possible rebound in the medium term. Therefore, a long position is advisable with an entry price around $9.20, aligning with the recent price dip and below the current forecast. The stop loss should be set at $8.80 to protect against further downward movement, while the target price should be around $9.90, aiming to capture a potential price rebound towards the resistance level. This strategy allows for potential profit from a price increase while mitigating risk with a well-defined stop loss. Based on the provided data for Litecoin, a short-term investment strategy appears most suitable. The recent 2-week price history shows a volatile pattern, fluctuating around the $70 price point. While the forecast suggests a slight upward trend, price remains relatively close to the support level of $64.8. This indicates a potential for short-term price fluctuations, creating opportunities for agile traders. Therefore, an aggressive short-term investment strategy would involve entering a long position at the current price, around $70, with a stop loss set slightly below the recent support level at $69, a target price of $71.21. The resistance level would allow for capturing potential upward momentum. This strategy leverages the potential for a short-term price surge towards the resistance, while mitigating risk by setting a stop loss below the support level. Based on the provided information for Uniswap, a short-term investment strategy appears most suitable. The historical price data shows a fluctuating trend with recent price movements suggesting a potential for consolidation or a slight upward correction. The forecast price indicates a gradual increase over the next week, aligning with this notion of a short-term upward movement. Considering this, a long position on Uniswap is recommended. The entry price should be around $7.55, slightly below the current price, allowing for a margin of safety. The stop loss can be set at $7.35 to protect against a sudden price drop, while the target price can be set at $7.85, aiming to capitalize on the projected upward movement. This strategy allows for a relatively quick return on investment within a short time frame, taking advantage of the anticipated price increase. Based on the provided information for Bittensor, a short-term investment strategy appears most suitable. The 2-week price change demonstrates a downward trend, and the forecast suggests further declines. The current price is close to the resistance level, indicating a potential for a pullback. Therefore, an aggressive short-term strategy would involve taking a short position at the entry price of $544. The stop loss should be set at $560 to protect against unexpected price increases. Target price could be $510, aligning with the lower end of the forecast and providing a reasonable profit margin. This strategy capitalizes on the anticipated price decline while managing risk through a well-defined stop-loss order. Given the price trends and forecast for Internet Computer, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend over the past 2 weeks, with the current price hovering near its support level. The forecast indicates a further decline in price over the next week, suggesting a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated price decrease. An entry price of $7.80 would allow you to enter the market slightly above the current price, while setting a stop loss at $7.904 to limit potential losses. The target price should be set at $7.651, aligning with the support level and allowing you to take profits before the market hits major support. This strategy aims to capitalize on the short-term downward momentum while managing risk effectively. Based on the Artificial Superintelligence Alliance price data, a short-term investment strategy focusing on a short position seems appropriate. The 2-week price change shows a downward trend, and the forecast indicates further declines. Price is currently near its resistance level of $1.345, suggesting a potential for a pullback. A short position allows us to capitalize on this anticipated decline. Therefore, an aggressive short-term investment strategy would involve entering a short position at $1.340, aligning with the resistance level and the potential for a price drop. The stop loss should be set at $1.370 to protect against unexpected price surges. The target price would be $1.250, slightly above the support price of $1.264. Allowing for profit taking before the price potentially finds support. This strategy leverages the bearish outlook suggested by the price trends and forecast, while incorporating risk management measures to protect potential losses. Given the price trends and forecast for Optimism, a cautious investment strategy would focus on a short-term approach, aiming to capitalize on potential price fluctuations within the next week. The historical prices demonstrate a mixed trend with both upward and downward movements. The forecast suggests a slight downward trajectory, with prices potentially falling below the current level. However, the support price at $1.55 provides a potential floor for the price. Considering this information, a short-term long position could be considered with an entry price around $1.60, aiming to profit from a potential rebound towards the resistance level of $1.781. A stop-loss order should be placed at $1.55 to limit potential losses if the price drops below the support level. The target price could be set at $1.75, allowing for a reasonable profit margin while acknowledging the potential for further price fluctuations. This strategy prioritizes risk management and aims to capitalize on short-term price movements within a defined risk tolerance. Given the price trends and forecast for Ethereum Classic, a conservative investment strategy would focus on a short-term approach. The historical prices show a slight downward trend, with the current price hovering near the support level of $18.76. The forecast suggests Ethereum Classic could continue to decline, reaching as low as $18. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An aggressive short-term investment strategy could involve entering a short position at $19, aligning with the current price. The stop loss should be set at $19.20 to protect against any unexpected price recovery. The target price should be set at $18.10, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $18.76. Based on the provided data for Ethereum name service, a cautious short-term investment strategy appears most suitable. The 2-week price history demonstrates a lack of clear direction, with the price fluctuating within a relatively narrow range. The forecast indicates a continued downward trend, suggesting a potential for further price decline in the coming week. The support price at $15.85 and the resistance price at $17.51 further highlight the limited upward potential. Therefore, a short position on Ethereum name service is recommended for a short-term investment horizon. An entry price around $16.50 would allow you to capitalize on the anticipated downward movement, while placing a stop loss at $17.00 to minimize potential losses. The target price could be set at $15.50, aiming to profit from the expected price decline towards the support level. This strategy prioritizes risk management by establishing clear entry, stop loss, and target prices, aiming to capitalize on the perceived bearish momentum in Ethereum name service. Based on the provided data for Solana name service, a medium-term investment strategy appears most suitable. The historical price shows a fluctuating trend, with recent fluctuations indicating potential volatility. However, the forecast suggests a slight upward movement in the coming week, aligning with the current price hovering near the support level. This suggests a potential opportunity for a long position to capitalize on the predicted price increase. An entry price of $0.245 aligns with the forecast, providing a reasonable point to enter the market. The stop loss should be placed at $0.232, slightly below the recent lows and the support price, to minimize potential losses. The target price can be set at $0.267, aiming to capture the potential upside movement towards the resistance level. This strategy allows for a medium-term hold, allowing the investment to potentially benefit from the upward momentum predicted by the forecast while managing risk through a well-defined stop loss. Given the price trends and forecast for Aave, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend over the past 2 weeks, with the current price hovering near the support level of $137.42. The forecast suggests a continued downward movement, with prices potentially reaching $147. In this scenario, a short position is advisable to capitalize on the anticipated decline in prices. An aggressive short-term investment strategy would involve entering a short position at $152, aligning with the current price and allowing for some room for price fluctuation before entering the short. The stop loss should be set at $156 to protect against any unexpected price surges. The target price should be set at $145, slightly above the forecasted lowest price, allowing you to take profits before the market potentially finds support. This strategy aims to capitalize on the short-term, downward momentum of Aave while managing risk through a well-defined stop loss. Based on the provided injective price information, a cautious short-term investment strategy appears most suitable. The historical price data reveals a downward trend over the past 2 weeks, with the forecast suggesting further declines. While the support price is at $19.24, the current price is hovering near $18, indicating a potential for further downward movement. Therefore, a short position on Injective is recommended. An entry price of $18.50 would allow for a small margin above the current price, with a stop loss set at $19.00 to mitigate risk. The target price should be $17.50, aiming to capitalize on the forecasted price decline while staying conservative. This strategy prioritizes risk management and aims to profit from the short-term bearish trend in Injective. Given the price trends and forecast for Polygon, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the forecast indicating further declines. The forecast suggests Polygon could drop from its current price to as low as $0.306, while the support price sits at $0.3201 and resistance at $0.3566. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. For a short-term investment strategy, an entry price of $0.335 would be ideal, aligning with the forecasted price. The stop loss should be set at $0.34 to protect against any unexpected price recovery. The target price should be set at $0.31, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $0.3201.